Hi there, it's Brad Gilbert here with the Daily Market Insight for Tuesday, the 22nd of August. All right, now we do have a pretty light on week, especially at the start. We do have a few US numbers coming out today, but trading pretty much muted. Now, you're going to see all week a lot of reference to the Jackson Hole Symposium. I was probably a little bit light on yesterday, sort of brushing it aside a bit, saying not much comes out of it. To me, Jerome Powell has the last speech. He will come out, and I still think will reiterate the war on inflation is not over, right? Now, there's been a lot of conjecture around this, but the way the equity markets are moving and also the US dollar, it is for a higher or a more hawkish Federal Reserve, right? Potential higher interest rates. And I'll show you that in a second. Now, the left field event that I think could come out, and this used to happen years ago in the 90s, there may be a joint collaboration across all the central banks to help the BOJ get the yen back up, right? That may be the sort of left field event. And just having a look at the yen, it's obviously sort of falling against everything. So that's where they could get power by bringing all the central banks together, and they stand behind each other and say, this is what we want to see. Anyway, that could happen. Now, just having a look at the where the sort of focus is today, right? There's not much on, right? There's the balance of trade numbers out of Switzerland. I'm not really interested in that. The industrial trends orders, not so much. If anything, the US existing home sales is something you could hang your hat on. We've got a bunch of Fed officials there speaking, and some API crude oil stock change numbers. But now they aren't the major numbers, but that's all we've got, right? So Tuesday, it'll be around, and this is why the news services do start to come out with stories about Jackson Hole, etc., because there's nothing else happening. Now, let's just have a look here. I've been having a bit of a tweak here of some of my templates on Metastock. Now, if you look at the longer-term perspective, right, so go to a month to date, you can see it very clearly. Equity markets, right, getting hit. Now, this would sort of go along the lines of what the market is expecting from the Fed, you know, a hawkish stance, potentially higher interest rates, and that's why the equities are coming off, right? I know the NASDAQ had a great day, but the rest of them on a long-term perspective, and these global equity markets are joined at the hip, right? North American equity futures directs generally everything, okay? Asian equity futures, European equity futures all down. Now, funnily enough, on that longer-term, medium to longer-term perspective, Euro, Sterling, Aussie, Kiwi, right, going down, and the US dollar going up. So you can see that trend very clearly on this global markets sort of page, right? The yen pairs obviously also getting belted, and that's what I'm thinking the Jackson Hole Symposium may come out with. Now, let me just give you a look at some of these charts, because there's one thing happening on the longer term trends, right? And then completely different on the short term, right? So if you're trading sort of short term at the moment, focus on the hourly charts, but, you know, keep one eye on the longer term daily charts. Now, longer term, the dollar has been going down. It is making a climb back, but the market is not ready to take it on yet and take out all the dollar shorts just yet. Okay, it's close. Euro is testing the downside. Dollar index looks set to go up. We've got the gold heading lower. Well, oil sort of tracking around that $80 in a bigger range. The equity markets, the Dow Jones Mini did just pulling back towards support. The S&P is broken down, and NASDAQ has broken down there as well. With NASDAQ, I mean, it's up, what, 36% for the year, right? That's got a long way to go. But so any sort of movements there, you got to watch those very carefully. Now, Bitcoin just dribbling back down below that short-term support level. Now, on a long-term picture, right, you get the idea of where the trends are. And there hasn't been a big clean out yet, which tells me the market is waiting for something. Usually the US CPI numbers, could be the Jackson Hole Symposium, could be the catalyst. But on a short-term perspective, if I look at these markets, right, it's a different picture. The dollar index, well, you can see much clearer. The dollar index is going up. Euro is going down. Gold is going down. You've got a sideways movement there on oil. And the equity markets, well, they are going down very clearly, right? As I said, different slight picture there on the overall longer-term trends, and Bitcoin lower. Now, on the currencies, right, same deal, right? You can sort of see here, I know these things are breaking, but if there was a clear break, you would see like euro drop down 3-4 cents. It hasn't done that yet, right? So the market isn't really ready to launch into it. They are sort of ripping into the Aussie and Kiwi. They've already convinced those two pairs with a bit of China slowdown that they are in trouble and already heading south. Okay, now dollar CAD starting to cruise topside. Dollar yen, once again, this is what I was thinking, because the BOJ has gone quiet and dollar yen where it is, you'd think they'd start talking, but with the symposium on Friday, that could be the real key to it. Now, the dollar against the dollar index and dollar Swiss, they look primed to go up. So what am I looking for? I'm looking for the numbers to sort of match up what's happening on the short-term perspective, right? And if I come over to the short-term perspective, you start to sort of see a bit of a picture here. Let me just come back to the hourlies on that one. Okay, so the dollar index clearly sort of breaking higher. Dollar Swiss has sort of really started to track sideways. Excuse me, dollar yen up, dollar CAD up. And you can see here, it's a lot clearer picture on the hourlies with all those pairs, euro, sterling, Aussie, Kiwi, all tracking lower, right? So now, why am I explaining this? Well, you can have short-term downtrends in long-term uptrends. And I'm not trying to sort of say that the euro and sterling are still in an uptrend. To me, they have broken, but I am concerned that, or consciously sort of awaiting the next move, because a break of a longer term daily trend like that should see a big clean out to the downside and the next big leg down. But we're not seeing that on euro and sterling, the two bigger pairs. So what do? Well, I'd go with the short-term trend. If you are trading right now ahead of any major releases like the CPI numbers, or say, for instance, even this Jackson Hole Symposium, follow the shorter time frames, like the hourly time frames. That's going to give you a bit more, well, it's going to give you levels and clearer direction, right? As you can see, even on the short-term perspective on the hourly, sterling has had a bit of a clean out to the downside and is starting to drift sideways. A little bit the same for the Aussie just at the moment. And the Kiwi, well, not too different to the Aussie, but you can see exactly what's happening like intra-week, if anything, not just intraday, intra-week on most of these pairs. So it's a little bit interesting. Now, if I just come back to my main data page, right? So we've got this global markets page, which sort of allows me to see very clearly what's happening. Now, on this page, the US treasuries, the price is down, yields are up, right? That's what's driving the equity markets down. So keep an eye on the US treasuries. Now, is that price action on the global bonds happening across everywhere? Not really, right? The UK, German bonds prices up. Well, yields aren't really down, but they're not exactly sort of setting the house on fire. So, but keep an eye on the US, right? The US is like the mothership of all this stuff, right? And if the treasury yields are going up, well, you can be sure as hell the equity futures or the equities aren't going to go up, right? It's a bit of a mismatch there. Now, with that, I've actually also come in and sort of just reconfigured a few things. Call this one Follow the Trail, where you can see a little bit clearer on an intraday perspective what's happening. So like daily percentage change, say down, you're seeing a clear risk on, risk off profile in the currencies in the Asian session. Absolutely not. No surprise. Okay, everything's been reset. There's no data to work with. There's no fresh news. So it's just sort of drifting sideways. Commodities, well, once again, right at the moment, not a hell of a lot going on. No sort of clear risk on, risk off profiles. The safe havens, nothing there to really see. The oil trade, well, crude's up, and well, you get CAD. Well, there's nothing really that clear. CAD yen's up, and that's pretty much it, right? Now just coming back, one thing before I finish up is the yen, right? So keep an eye on these yen crosses, because as I said, they're all sort of tracking topside once again and moving very freely. So we should see something out of Well, I've just got a feeling, a gut feeling that the Jackson's Hole Symposium, the big surprise packet will be, okay, this is the fair value of yen. You've all got it wrong, so to speak. And that could be a hell of a move, because that happens on the weekend or on the Monday Open, right? So we might see a bit of a surprise packet there. Outside of that, just follow the numbers that are coming out, right? There's nothing more you can do except start to factor in the upcoming numbers. Do they go with the short-term trends? In actual fact, are the short-term trends even trading at this point, right? So if you're looking for the higher impacting numbers, even trading economics, there's a few here. The German manufacturing PMI, durable goods, probably the two picks. But Wednesday's looking a little bit better with a few more tangible numbers to hit, sort of second, third tier, as well as Canadian retail sales figures there as well, and some manufacturing PMI numbers out of the UK. So Wednesday looking better. Today, not much. It's a great day, and this is pretty much what I've done, is I've gone through and just sort of tried to make things a little bit easy for me to understand and see what's going on, whether it's through the global equity markets, following the day-to-day trail of what's impacting what, and then looking at the global markets as a whole, trying to piece together what's happening and what's driving what. Okay, if you can find these links to what is moving the various instruments, well, I tell you what, you're going to be ahead of the market, and it's very easy to see what's going on, whether it's the connection with the US equities to the US treasuries and what that impact is on the global currencies. All right, guys, I know that's a little bit long-winded, but it's more of an educational piece than anything else. But not much more to do just at the moment. Tune up your charts, hourly charts, daily charts, prepare for those key levels and any shifts in momentum, right? That's what we're doing at this point. All right, guys, have a good one. All the best. Cheerio.